Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the Australian Rare Earths and Critical Minerals Conference. Our next presentation is from CUFE Limited. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Mark Hancock. He's the Executive Director of CUFE Limited, which trades on OTC Markets under the symbol CUFLF and on the ASX under the symbol CUF. Welcome, Mark.
Yeah, thank you, John. I appreciate the chance to join. And welcome to everybody who's watching. And look forward to introducing you to CUFE. I suspect it's probably a new name to many of you. So hopefully it can give you a bit of a flavour of what we're about and demonstrate what a good opportunity we have in front of us. Just starting briefly with a bit of a corporate overview. I won't touch too much on the projects on this slide because we'll deal with them as we go through. We've got a capitalisation at the moment of around about $70 million Australian dollars, ASX listed, as John mentioned. We've got around $6 million in the bank, and a couple of our major shareholders there, the Gold Valley Group, which is a private Australian group, who's our joint venture partner in a number of projects, and so their shareholding largely arose from the acquisition of those projects. And then European Lithium, which is a company associated with our chairman, Tony Sage. Tony, as I mentioned, is on the board as a chair. Myself as the executive director. Sort of got a long-term resources background, around 30 years now, oil and gas, and in the last 15 years or so, mining-based. A couple of the other directors there, Scott Meacock, who's a rep of Gold Valley, and Dave Palmer, who's the former head of the Rio Tinto exploration department. So he's joined us earlier this year, provided a lot of insight into the various exploration projects and opportunities around the world, and things that we can be trying to keep an eye on. Jumping into the projects now, this sort of shows you visually where they sit. Probably the most advanced ones are the two in the Northern Territory region of Australia, particularly focused on the Tennant Creek projects, which have historically had a copper gold focus, but increasingly we're seeing opportunities in critical mineral bismuth, and also seeing some silver and cobalt potentially coming through there. I'll touch a little bit on those two iron ore projects up in the top of the Northern Territory. And I'll also touch a little bit on our West Arunta project, which is a early stage exploration play, but in a very prospective area where there's been some significant discoveries lately. I won't touch too much on the other West Australian projects. The yellow ones are sort of gold-based, and the red one's another iron ore project. But as I say, I'll focus on those other three for today. Jumping into Tennant Creek, which is where we're spending most of our time, and so where I'll spend most of my time today. It's an area, for those that aren't familiar with it, that's been sort of prone to hosting generally small but very high-grade mineral deposits. So many of Australia's highest-grade gold deposits have been found in this region, going back sort of into the 1950s, 1970s. And the region was producing fairly regularly copper and gold up until the late 1990s, and then basically hadn't produced anything for 25 years until one of the gold projects recommenced production a few months back. And we're looking to replicate that on the copper gold side by bringing our project, the Gecko and Orlando project, through to production. And so, as I say, that'll be the one that I'm spending probably most of my time on today. It's owned in joint venture with the Gold Valley Group, who I mentioned at the start as our major shareholder. CUFE owns a 55% share and Gold Valley owns a 45% share. We're the operator and manager of that joint venture. The project's been mined historically over the last sort of 20, 30 years. Not much, as I mentioned, but 20, 30 years prior to that had been mined fairly consistently. And it's produced copper, gold, and bismuth. So I'll be talking about each of those. The resource that we have there currently is 24 million tonnes at 1.8% copper and about 0.56 grams per tonne gold. So that gives us an overall resource. This is on a gross basis, so our share is 55%, as I mentioned, of 439,000 tonnes of copper and about 436 ounces of gold. So In addition to that, we've got about 13,000 tonnes of bismuth. We're doing an update on the resource at the moment, which will grow that a little bit further. So what we're looking to do is to try and restart the project. It's been mined historically on both an open pit and underground basis. The plant that was used previously has been dismantled, so we do need to look at putting in a new plant. So at the moment, we're focused both on studying and gaining the approvals to reopen the mine, but also looking at exploration and opportunities to continue to grow the resource, because we believe that there's substantially more tonnes to be found in this area. And as I mentioned, if you find something, there's a good chance that it's very high grade based on history. This is just a bit of a view of the Northern Territory's copper resources. You can see that our project is amongst the biggest in the region, both in terms of the grade and also in terms of the tonnage. And it's got the advantage, the other larger one there is a full greenfield development, whereas ours, as mentioned, has been mined before. So there's quite a good head start in place. One of the other advantages that we have is that we're in very close proximity to infrastructure. So the railway line runs through the project and continues right up to Darwin Port. And we've also got gas power pipeline close by and things that will help to sort of reduce our capital cost of getting started. Good road network. We're quite close to the town of Tennant Creek, which has some ability to host workers for us. We'll provide support to those workers. So yeah, we're starting from a good base here. So when the mine previously shut down, we were seeing copper prices and gold prices that are a fraction of what they are today, in the order of 10% in the case of gold prices and around 20-25% in the case of copper prices. So people asking why did it shut down and what's changed? Well, primarily the answer is the price is very different, and obviously there's been some cost inflation over that time, but not to the extent that the price has grown. So it's a very robust environment at the moment for trying to get the project up and running. This just drills into the resources a little bit more. As it mentions up the top there, when we purchased the project about 4 years ago, it had a resource of about 7 million tonnes. We've grown that to 24 million tonnes to date, and we've got lots of further opportunities that I'll touch on later on in terms of exploration. Some of them are greenfield and some of them are following up on previous successful drill holes that have only been lightly explored subsequent to that. One of the key things to note here is the historical mining was based on a 2.5% copper grade cutoff, whereas I think the average copper mine in the world now is trading about around a 0.3, 0.4% cutoff grade. So back in those days, it was very high graded essentially, but that's meant that they've left behind lots of good material for us to take now. This just visually shows the two components. So Orlando was the one that was mined in an open pit sense. You can see on the left there's the historical open pit, and that sits above the blue, which is the existing mineralisation that forms part of the resource. You can see there the historical underground development in the black. And so the original model based on the 7 million tonnes was the top of the screen. And then the expanded model, which was part of us growing the overall resource to 24 million tonnes, that's roughly about 6.5 of those at Orlando, is the expanded blue zone below there, which you can see pushes down to pick up in and around the underground and also pushes out a little bit further. So that increase in the mineralised envelope, just by doing a lot more work on understanding where historical drilling was, where historical mining was, has given us a significant boost in resource. And you can see a similar picture on the right for the Gecko deposit, which is the other one. The top one was the original resource. You can see on the right there, we've lost a little bit of some of that resource, but we've gained a lot more in other areas. So overall, that one's increased by 400% from what it was when we acquired it, as we've done the further work. So you can see that one, again, was mined on an underground basis previously. We think this one's probably primarily a little bit deep to do an open pit, but you see things like Anomaly 3, which has got high grade, 3.3 to 5 pumps copper material. starting to move up relatively close to surface. So we may be able to look at small open pit there, but at this stage, the working assumption is that that would be an underground restart. And so the one that we're focused on first off, just because open pit is always a bit easier than underground, is the Tennant Creek Orlando scoping study and the standalone development of the open pit there. So you can see in the picture there, this is the historical open pit. And you can see the copper over in the face there. And we're looking to sort of cut that back further on a staged basis so that we can access around about 3.5 million tonnes of the total 24 million tonne resource via the open pit. And we've done the scoping study on that, which has given us some pretty robust financials, which I'll touch on in a minute. But yeah, we think that that's a very good bite-sized starter piece for us, gets us going, generates some good cash flow, and then will help us to fund the underground development in due course. This is just a bit of a highlight snapshot of the scoping study outcomes. And you can see there that it generated an NPV of 352 million. These are Australian dollar figures, and an IRR of 57%. And when we did that, we based it off long-term price assumptions, which are proving to be very conservative today. So we'd used a gold price of US dollars 2,200, and a copper price of US 9,250. And you can see today the spot gold price is over $4,000 US, and the spot copper price is well in excess of 10,000. Has primarily been trading above 11,000 recently. So if we slot those numbers in, the NPV close to doubles, with most of the revenue coming from the copper gold. We also haven't included revenue from the bismuth or from silver at this stage. So we're just doing a resource upgrade at the moment, and that resource upgrade is going to incorporate the bismuth and the silver at Orlando. And we think that we'll be able to bring them into the open pit scoping study, at least in part. So that'll be a sort of a good revenue boost for us, in addition to what we're seeing from commodity price growth. I'll touch on bismuth a little bit later because it's an important area for us these days. It has been mined there historically, but it's probably not something that's super well known in the resource world. So I want to give a little bit of flavour on what that's about. This has been calculated based on a capital cost of $136 million Aussie, and that's basically primarily process plant, $82 million. We think there's opportunities to source second-hand plants cheaper than that, but for this stage, again, trying to be conservative, we've based it off a new build. There is a couple of second-hand plants in Queensland, which is not too far away, that we could potentially bring over to look to save that cost. So yeah, that's probably the key focus area at the moment, is to be able to work out that plant design, and given it represents such a significant portion of the capex. But I think the super important thing to note here, as I mentioned, is that this study is only picking up 3.5 million of the 24 million tonnes total resource, but it's picking up a plant that will service all of those 24 million tonnes, and it's picking up the full cost of that plant. So when you get those subsequent tonnes starting to come through into studies, they'll be able to leverage off the plant that's already been funded by this project, and so they'll be comparatively very cheap tonnes to bring on board as we move into those next round of studies. Bismuth, as I mentioned, there's a photo of the bismuth plant back in the 80s when it was being mined previously. Bismuth is on the critical minerals list of basically all of the major economies. 80% of it is sourced from China at the moment. So when there was the talk earlier in the year regarding restrictions on the export of critical minerals, the bismuth price rose from in the order of $15,000 a tonne up to nearly $190,000 a tonne. It retreated fairly briefly as there was sort of some truces, if you like, agreed in some of those restrictions, but I think it demonstrated the opportunity and the risk that if you have got a very sort of controlled supply, there is an ability for prices to run out of control. And so the US in particular has recognised that and has recently issued a tender to purchase bismuth metals to stockpile as part of their strategic mineral reserve. So that's something that is very interesting for us. And as far as we're aware, we're sort of probably the biggest business resource in Australia. And being in a safe location like Australia, we think that'll be of strategic significance to some of those other countries. It's a fairly small volume market, probably only around about 20,000 tonnes per annum. But yeah, it's got various uses as a lead replacement because it's less toxic, far less toxic than lead. It's got a number of sort of medical type uses, but also now got an increasing number of defence-based uses and potentially sort of got some chip-based uses as there's been some work done as a potential improvement on silicon, but that one's still got some way to run before that became a mainstream opportunity. So that's something that's sort of just over the last 12 months really become a focus. If you look back at how we talked about the project previously, we hadn't really thought about that too much, but given it's going to be essentially mined as part of the copper gold anyway, we can take the high bismuth zones, which are typically an impurity in copper, and we can exclude them from the copper and get a standalone revenue stream out of them. And that's a win-win, basically. We remove a penalty and we add a revenue stream. So some great work being done by the team on that. We look forward to continuing that. This next one, I talked about some of the further exploration opportunities that we've got. So you can see here some of these ones have been subject of historical drilling. You can see Gecko and Orlando. This is not necessarily to full scale. So some of those other deposits are much larger than Gecko and Orlando. That may or may not be the case. It's really just the trend is of that size. So yeah, some of them have been subject of a previous round of drilling and perhaps had a few holes into them and not been fully drilled out to the point where they've been capable of being classified as a resource. Some of them are just conceptual targets based on magnetic imaging and those sort of things. But we've just got 150 drill holes approved by the government to go and start doing some work on that. And we did a capital raising recently, and one of the sort of uses of funds for that was to go and start drilling a few of these targets. And these historical targets, as you can see from this, have got quite a small physical footprint for something like Gecko, which has already produced a lot of copper and gold and it's got a lot left. So if we can find something of that size, once or twice across these trends, they could be real game changers for us. So that'll be something that we're looking forward to getting onto probably early in the new year. Also in the region, it's starting to re-emerge. As I mentioned, it had been pretty dormant for 20 years, but you're starting to see a number of companies coming back in there of recent times. We've teamed up with two of those smaller companies that have each got copper deposits, Emerson Resources and Tennant Minerals. And we're basically working together on a plant study that would look at sharing a new facility rather than each looking to develop our own plants. So that's going to be capital efficient for us, and I think could provide some reduction in that capex that I talked about for the plant. At the moment, that's based on CUFE bearing the whole cost of the plant, where if these parties continue to progress their projects and our alliance continues to progress, we'd be looking to deploy a bit of that capital their way. Probably the other big change recently has been the introduction of a company called Pan African Resources, which has got I mentioned a new gold plant had started that had been being developed by a private group, Pan Africa, which is a South African-based gold company, with also listed on the London Exchange. They purchased the private group probably a bit over 12 months ago and brought online their gold project and are now looking at bringing online a copper plant as well. So again, there could be some opportunities to work with them on that. I guess one of the other potential ways that Pan Africa could be involved is that in their presentations, including in their recent results announcement, they've talked about their desire to look to sort of consolidate the area and acquire they've called stranded or allianced assets. We certainly don't consider ourselves stranded, but we are obviously part of the alliance, and our tons are specifically mentioned in that presentation as one of the things that they've got an interest in. So, that provides a potential point of interest, I suppose, if they decide at some point to make a move on that. But obviously, that's not our primary aim. Our primary aim is to continue to progress the project and to bring it into production, because we think that they're very attractive projects, and they'll provide very good returns, given that you've got, probably Orlando open pit is less than 15% of the total resource, already having a current NPV well in excess of $500 million. So I think for Tennant Creek, that's probably the main points on it. But good tonnage, good grade, polymetallic. You've got the copper base, but also the gold, which has become now the major revenue stream at these prices. The bismuth, and also silver and cobalt in there, which we may be able to make economic. It's been mined before, it's been processed before, recoveries were good, metallurgical properties are good, so we've got a lot of historical data to leverage off. We've got the good infrastructure that I mentioned earlier. Because it's a heavily disturbed area, the rehabilitation and initial approval obligations are slightly less than what you would typically see in a greenfield project. And there's the exploration activity that gives us the opportunity to further grow our base. So lots to look forward to there. Given we've got the FE in our name, I better just briefly touch on our iron ore projects, which are up in the Northern Territory. The company was running a iron ore mine in Western Australia for about 3 years, up until late last year. But we ended up selling that mine to focus on more effort on the copper gold project. So that's really been our primary focus since that time. But we have got a history of starting and running iron ore mines. Myself and many of the team were with an iron ore company for a number of years and have brought a number of these small mines online. We can bring them online pretty cheaply and pretty quickly. The mine that we started back in 2021, we bought online for less than 5 million Aussie, and in less than 4 months from receiving the approval to first ore. So these are the sort of things. They're not, big scale BHP Rio type mines that have lots of infrastructure. They're cheap and cheerful. They use trucks to get the ore to port. They use mobile crushing plants, etc. This one we particularly like because it's 100 kilometres from the port, so the transport cost to Darwin Port is very modest, and that enables us to have a low cost on ship. We've got a couple of different ways we can attack this one. It's got a low grade section and a high grade section. We're looking at either blending those two or running one or the other as separate streams. So we've been doing some study work on that at the moment. Environmental approvals is a little bit of the critical path here. We're doing some further work to understand how we can fast track that. But at the moment, the key focus really is on the Tennant Creek, as I mentioned. This just sort of outlines the ore body there. You can see the low grade being the flat, low-lying body on the left, which would make it amenable to low cost mining. So even though it's a lower grade ore body, its net margin may be similar to the higher grade, which is a more conventional sort of pit where you would be drilling and blasting to mine that one. One brief one on Camp Creek, which is just next to Yarram, about 5 kilometres away. It looks like it might have some high grade ore there. We've only done work on surface at the moment. We haven't yet had a chance to get in and drill some holes there. We've only picked this one up pretty recently. But the rock chips that we're seeing on surface, 65, 67%, dictate that we definitely want to get in there and drill a few holes in that. I know iron ore is probably not viewed as that sexy by the market, but at the end of the day, most of the big miners are still making most of their money out of iron ore. And if you do it right, I think there's still a good opportunity to do that. I'm up in China at the moment, and we're still seeing good demand for people wanting to secure new projects. And the final one I just want to touch on today is the West Arunta region, which is up in the northwest of Western Australia. Quite a remote area. Historically hasn't had too much exploration done. But for those of you that have sort of followed the sector, you probably would have heard of stories like WA1, which was trading at a few cents a couple of years ago, and then had a very significant niobium discovery and sort of went over $20. So that's kind of the dream for us. Another one of those would be very nice. So we've got 4 tenements in that region, which have been going through the approval process with the traditional owners and with the Minister for Aboriginal Affairs. It's an Aboriginal reserve area up there, so we need to go through a few hoops to get approval to do work on the ground. But we're through those now and ready to start work on the ground after we've had some further consultation with the traditional owners early in the new year. So our tenements are probably about 40 or 50 kilometres away from the WA1, and also Encounter Resources has been having some very good success in this region. Niobium's been the primary success to date, but being carbonatite hosted, there's sort of rare earths potential, and there's also some potential for IOCG, copper gold type discoveries. So, very greenfield project. Haven't really done much work on the ground, but the location is exciting, and so I think that's worth to bring to your attention because it's one of those high risk, high reward opportunities. So just to wrap up, over the next 6 months or so, we'll be updating our resource on Orlando, which will include the bismuth and the silver. And then we'll have a chance to update the scoping study economics to reflect those minerals being included, and potentially also to reflect some of the current pricing trends. We'll continue to progress the feasibility on that project, and also looking at a potential for a DSO starter while we're building the plant. There's a Mount Isa processing plant run by Glencore, which may have some opportunity to take some direct ship feed. There's also some people we've been talking to up here in China that are potentially interested in taking some direct ship feed. We're still working through the economics of whether that makes sense or not, but could be something that got us some early cash flow in the first year or so. The Gecko area, we're going to continue to improve our confidence in the resources and move them through the classification categories, which will then mean we can do some studies and put some economics around those. We'll drill those high impact targets that I mentioned. The approvals and land access with any project is important, so we'll continue to push those in preparation for starting Orlando. And those last couple of ones I mentioned, the exploration projects at Camp Creek for iron ore and the West Arunta for the niobium, etc. So I think that's pretty much my time up, but really appreciate the chance to give you a bit of flavour about the company. And please, if there is further questions, I'd be happy to arrange a separate meeting via the meeting system to step through or deal with any specific questions. Thanks again, John.